Thank you so much for being here, and welcome to our panel at MPC 21. Our topic for this session is digital wallets and privacy protection. Now, there are a lot of critical and unanswered questions that our panel is going to help explore and provide answers to. It is great to have so many friends and audience members tuned in from all around the world. I'll be your moderator for this session. My name is Ali Madavji, Managing Partner at Blockchain Founders Fund, which invests in and venture builds top-tier startups and consults organizations such as the United Nations. I serve on the board of two public companies in the blockchain space, which includes CryptoStar, which is a Toronto exchange venture company, and Mechanical Technologies, which is a NASDAQ-listed company. I also serve as Senior Blockchain Fellow at INSEAD. More importantly, we have a phenomenal panel here with us today. First off, with Ricardo Correa, the head of Global Central Bank Digital Currencies at R3. Ricardo was previously the co-head of Emerging Technology at Commonwealth Bank. Second, we have Warren Paul Anderson, who is the VP of Product at Discrete Labs and previously worked with Ripple and the NASDAQ Entrepreneurial Center. And last but not least, we have Michael Sung, founder and chairman of Carbon Blue Innovations, and serves as a member of the faculty at the China Institute of Economics and Finance and HKUST. Michael holds a PhD from the Massachusetts Institute of Technology. Now, if I can get each of you to turn on your videos, and we're going to jump right into this. Now, we're seeing massive growth over the past year in cryptocurrencies, but also many people would argue a trend of government overreaching, which has led to some of this growth. Now, there's also been a growing strength of privacy advocates and privacy solutions. So I want to kick off with Michael to set the stage for us. Now, at a high level, is this privacy protection discussion even relevant in a financial context? I mean, some people have said, if you have nothing to hide, then what are you worried about? Oh, Michael, you're on mute. Oh, it looks like we might have lost Michael there. Maybe Warren, do you want to jump in on that and share with us your thoughts around privacy protection in a financial context?
Yeah, sure. Thanks a lot, Ali. Yeah, so privacy protection in the financial context actually probably even more relevant than most people give credit to, because what's happening is, a lot of these major platforms that particularly around social media are getting into, the digital wallet space in the super app kind of context. WeChat in China is a big example of that. But I also, with policy updates or privacy policy updates with WhatsApp, I think someone like Facebook is also becoming, wants to become more of the super app. And so what we're seeing is financial transactions are being combined with social data. And when you combine those two, you could actually do some damaging things if that data is accessed by, nefarious actors. So I think the need for privacy is becoming more and more important. The need for end-to-end encryption is actually becoming stronger, and then also the need to access that data through encrypted through encryption is actually becoming an emerging field. We could talk about more about that in the future, but just even recently with some of the policy updates in the US regarding the crypto provision and legislation. As written, it would have been very hard for individuals and entities to comply because they would have access personal identifiable information and reporting, that to the IRS, which, currently there's no function for them to do. So I think the privacy conversation needs to be a lot more visible and a lot more, front and center.
Okay, no, I definitely can see that, and I think there's a lot of things here to explore. Maybe let's go to Ricardo, and then we'll come back to Michael. Ricardo, you lead R3's CBDC arm. What are your thoughts specifically on privacy within finance? should we be fully private or transparent? I mean, what's your stance, or even of governments that you work with in central banks?
Yeah, thanks, Ali, and thanks for having me on. I see Michael's joined us now, which is great. So my perspective, really, from a CBDC perspective, a digital currencies perspective, we saw the work that the ECB did around their papers not too long ago, where privacy and anonymity were kind of the most talked about subject within the feedback that the ECB was looking for, mainly around kind of the private sector and kind of retail sector. So this thing is so multifaceted. I think we all don't necessarily want everyone to see what we're spending our money on. Warren mentioned you mentioned if there's nothing to worry about, what do you care? But I think there's elements of our data that certainly we wouldn't mind sharing, but there's elements that certainly we want to keep private. So there's this ongoing debate around if we were to issue sovereign money, how is that sovereign money going to be handled from a privacy and an anonymity perspective? And different jurisdictions have different views. We see what the PBOC is doing in China with their accelerated digital yuan project. We see other regions addressing this in a very different way. I think ultimately what we need to ensure is that today, when you have money in your pocket and you pay someone with that cash, that payment is completely anonymous and private. It's between you and the counterparty. Do you really want all those payments to be visible once we digitize kind of money? Perhaps not. So I think there's certainly a reasonable debate about what levels of privacy do we need, what levels of anonymity we need. And there's no one answer that will fit every single jurisdiction. I think there's going to be different levels depending on where you are.
So I think that's very insightful, Ricardo. And maybe Michael, you can jump in on this. I mean, do transactions really need to be private though between you and that other party? I mean, we see cases where credit cards already sell that data, to other parties, so they know what you're transacting, for example. So, what's the risk here really that we're looking at of that, data being, say not fully private, but within, say, and be able to be shared between a number of parties?
I'll pass to Michael, but let me just address that. I think it's one about choice. I think really it's about choice, and us as kind of the retailers and as individuals having the choice of whether you want that to be private or not. I can pay with my credit card knowing that the credit company is going to see that. But if I don't want anyone to see that, I can pay with cash. So I have the choice. So the point being is that we need to maintain the choice. We shouldn't remove that necessarily, in my opinion. So, we know that these things can be traced, but we also know that we can keep them private.
Yeah, I'll comment on this. I get asked this question a lot, being a, sort of expert weighing in on the digital RMB. One of the first questions that always comes to mind is, okay, well, the central government, now that it has all the digitized, metadata associated with payments, can do a lot of big data stuff and surveillance and this kind of thing. And my retort to that is, well, the existing financial institutional sort of space does monitor all transactions. And, if anyone with a bank account, it just goes KYC. Any transaction around $10,000 is certainly monitored by authorities to make sure, I think, in a well-reasoned way, for anti-money laundering or terrorism financing or other illicit uses, right? So for better for worse, the whole institutional world, it's not just China or the US, it's the entire banking industry is beholden to a lot of compliance and rules related to that. Now, I think specifically just talking about the digital RMB, because I think there's a nice use case. They put in a level of what they call pseudo-anonymity. Okay, which means to say they monitor the gateways, right? In the traditional world, those are the bank accounts. You have to get a bank account, you have to do a KYC and give up a lot of private information. And there's different tiers of that, right? If you're doing some micro transaction, they don't care. From mid-level amount of money, you have to do give your passport. Maybe if you want unlimited amounts of money to be transferred, you need to go to a branch office and fill out some more specific information. So they monitor the on-ramps and off-ramps. In the digital world, that's the digital wallet. So if you're charging your wallet then above a certain amount, they want to be able to see that. And I think that's pretty well reasoned. That's how they gatekeep for illicit activity. But once in the system, digital wallet to wallet transfer, they don't really need to know that you're going to the 7-Eleven to buy condoms or whatever it is, right? And indeed, they don't really care. In fact, in the case of the PBOC and the digital RMB, these transfers can actually happen in a peer-to-peer way between wallets using NFC technology without the presence of Wi-Fi or internet, which means to say that there is no physical way for the government to actually monitor those transactions. And I think that balance, right, to be able to, allow, individual transactions to be anonymous, but to monitor flows of capital, I think is, probably the hybrid solution that matters. The other important thing that I like to point out is, actually, my thesis advisor is a very famous, data trust person. His name is Sandy Pentland. He speaks he's a tech pioneer at the World Economic Forum. It basically about building trust systems with data. He has this concept called the New Deal on data, which is to say, self-sovereign data. Okay, the idea here is that people's transactions, people's data are basically custodied by the individual, right? And then you can opt in, right, to be able to participate, have your data be aggregated in data ways to do credit risk analysis. So some company can make money, but you opt in. And that transaction can be your data contribution can be track and trace through blockchain to a cumulative amount, and then micropayments might come back to you because of those things. So that's a market transition than the old sort of extractive data collection that, say, Facebook does, where you don't even own the data that you generate, right? So I think that's the world that we're moving to, and the technology is developing. We're working right now with a company called Versus, who has developed a digital asset right framework, okay, where each piece of asset or data can now be meta tagged and also could be in different domain rights with asset control. So we have a very fine-grained mechanism to be able to track and trace assets, and we can aggregate that, but we can do so in a controlled way where the people who own the data, i.e. the people who generate the data, have that control. So I think that's some interesting new technology that we brought to bear within the next few years.
Yeah, I definitely think that this is fascinating, right? When you look at this, though, how much of it is theoretical based on where we want it to go versus where it might actually go with governments, wanting to have access to all of that data. And I know, we might say that they don't want to get access to small transaction data or things like that, but there's also the counter argument. I think it was brought up by Christine Lagarde, where she mentioned that maybe it could get held against you if you go out and say buy beer all the time, or if you need to use it for, like, say, other illicit activities, so any of the dark economy type of stuff. But should that get held against you, right? With cash, it might not right now. So like, even if it's not necessarily above 10,000, is there an issue? And then I guess the second question is, even for the government to know aggregate transactions to add up to over 10,000, they would have to know all of the minor sort of transactions that are happening as part of that. So I guess, Warren, Ricardo, any thoughts to this piece, or do you see it as sort of in the way that Michael mentioned, where it might be pseudo-anonymous in that way?
Yeah, I mean, I think that there's a big difference between privacy and secrecy. Privacy being you effectively do not want the world to know something, and secrecy being you don't want anyone to know something, right? And that's a key distinguishing factor that I think needs to be discussed more in these conversations. And right now in the digital economy, we have no notion of a cash transaction. The closest thing we have is a cryptocurrency, transaction that can be conducted with various, pseudonymous kind of properties. So I think we need to start having those conversations of how we can responsibly allow people to opt in and have control over their own transactions. And what does that look like? And I think, for instance, in the cryptocurrency world, I think there's a lot of practical applications that are being built. But how does that apply, into the fiat world? And I think that's where we start to see, a lot of interesting trends on these stable coins, wallet providers. You have card issuers that are coming in, and partnering with stablecoin issuers. So there's a blend that's happening right now, and I think there's going to be a massive collision in a good way that's going to affect, individuals. So that, when I have, my physical wallet here, I have, and I can control my identity. I can disclose, my identity when I make transactions, when I go buy beer or whatever. I can equally do the same thing in a digital transaction, and I'm selectively disclosing each piece of data. I'm not leaving a paper trail of data. I can revoke my, rights to my own data. All these things are happening in a practical sense, I think, on the fringe. But we need to bring them more into, the regulatory regimes and the government bodies to protect citizens. So there's a lot of those conversations that are happening. Again, there's on the practical side, which I operate more on the practical side, and try to work with the theoreticians and those in government that are trying to weigh these technologies and how to apply them to protect users.
And my comment would be, I mean, what Michael mentioned, self-sovereign identities, self-sovereign data, the ability to, at a very micro level, be able to control the data that's being shared with organizations. Warren mentioned, the ability to revoke that data. I think that space is developing, and if you're in it, it feels like it's all that's going on. If you're not in it, you can't see it. So there's a tremendous amount of movement. There has been for years around self-sovereign identity. A CEO of a very large international payments company once said to me that, identity is the poison chalice, digital identity. We all want to do it, but it's damn hard. It's very difficult to get the right balance of everyone's everyone's needs, be it, the individual, the corporates, the institutions, and governments. So it's a difficult space, but there's a lot going on with self-sovereign identity, which I think is really powerful. On the other side, on the money side, on the digital currency side, we've been exploring this notion, and you guys no doubt have heard it, of programmable money. Now, programmable money sounds exciting. It's a double-edged sword in some senses, because whilst it's it makes a lot of sense at the wholesale side, central banks to wholesale banks, and being able to provide, quote unquote, kind of this operating system of money so that you can provide some guardrails. I think as that programmability moves into the public side, we really do need to step back and look at kind of the philosophical aspects of what we're doing here, because being able to control the money down to the finite kind of points may be a restriction for its adoption by folks that don't necessarily want full control of your cash. I will say, though, that again, the work that we're doing with central banks, what you're starting to see is the values of those jurisdictions being deployed into the cash itself. So, to Michael's point, the ability to be able to bump my mobile wallet with Warren's mobile wallet, and cash can move between those two devices without Wi-Fi, without any network, just through NFC, etc., is a good way to provide that privacy and anonymity. But then you do need the trust of the people to say that, hey, I trust that this technology is doing what it says it's doing. So I think we're some way off to provide true confidence to individuals to say that, hey, if you do want privacy, you'll have those controls, and you can trust that the technology is doing what it says it's doing.
No, I absolutely. I think programmable money, I mean, seems to have a lot of interesting aspects to figure out, but I think can be quite promising here. But before we move on, I do want to take a question from Adrian. I'm going to open up to all three of our panelists. So Adrian asks, do you think that too much transparency to government or public that is considered intrusive by individuals now or later on could lead to a public backlash to not use these payment venues and to look for alternatives, maybe private channels?
I mean, I'll have a quick stab. I think someone mentioned it, Michael, maybe you did, which is, or Warren, today, if you have a bank account, you have a kind of a digital money in some form, you're completely tracked anyway. So, it just depends where folks are looking. Is it at the gateways? Is it the internal systems themselves? I think the easy answer is yes. If people don't trust the money, then they'll look elsewhere, right? But what level of trust are you looking for, and what level of privacy are you looking for necessarily? Because if I've got my mobile app and I've got my bank account and I move money here, then that's not necessarily private. Maybe it may be private kind of globally, but it's certainly not private to the institution and the people within that institution. So again, I think it's a level of privacy. What are you looking for exactly? Cash gives us that 100% guaranteed private and anonymous transaction. So again, providing choice back to the individuals and to kind of society. What will be that one thing that we can absolutely be sure of will give us that privacy and anonymity? And then there's levels, there's grades that you can kind of move up from that. It's like, hey, I don't mind if the institution that actually custodies my wallet can see this, versus, I can do a Venmo payment in the US and make it fully public to everyone in Venmo. So it really depends, I think.
Fantastic. So we got one more question that came in that I think has been very relevant a lot in the news recently. And so I want to bring it up here as well. Al's asking, suppose all central banks, commercial banks, corporates, and users engage in blockchain or distributed ledger constructs. How much energy will be necessary, and what is the resultant environmental impact? And I want to add to this question, does it make a difference if it's, say, private or secret or public in any way, or is that relevant?
Yes, that's a really good question. It's kind of it depends on the I think in terms of like the digital ledger or blockchain kind of technology specifically. I think it's been pretty well documented that things like proof of work are fairly energy intensive, and as they grow, they increase in the actual energy consumption due to the mining aspect. There begs a question of what type of energy is being used. Is it renewable? Is it more coal-based? So I think there's a lot of discussion happening there. Some of the newer like proof of stake type consensus mechanisms use less energy. They also, classic kind of practical Byzantine fault tolerance is just very similar to like running an email server. So, I think it doesn't have a huge impact on the cryptocurrency side. And in fact, a lot of ways actually can be more efficient than physical fiat, because if we've read, literally airdrops of cash being distributed into different countries, where they're literally dropping billions of dollars out of a C-130 plane. I would imagine moving that type of money is a little more energy intensive than moving $1 billion worth of cryptocurrency. So it really kind of depends on the type. But in terms of privacy, we're working, for instance, on zero knowledge proofs, and the computation of the actual proofs does require some computational power as well. So you have to actually put in some work in order to compute those proofs to get that layer of privacy. And it's a separate type of computation than just doing a simple transaction. So there's a little bit of enhanced, computation there, but nothing near, what you would see in a proof of work kind of setting. So I think the technology itself kind of scales fairly well. And that privacy shouldn't make things more, or increase the environmental impact. It actually, should do the opposite.
I guess, Ricardo, you're in a lot of these discussions. Do you want to touch on this, on what some of the central banks are thinking? Are they using proof of work, proof of stake, or are they doing something completely different?
Yeah, I mean, it's a great question. If you took the entire financial system today, and you looked at the energy consumption of the current state, and then weigh that up in terms of where we're going, I mean, there's a ton of consumption of energy today. It would be hard. I think I think Michael at MIT could probably work it out quicker than I could. But the point being is that the current financial infrastructure is vast and it's super, super kind of intensive in consumption of energy. To what Warren suggested, listen, proof of work is expensive. We know that, Bitcoin mining is expensive. There's a ton of different other algorithms going on. Proof of stake, as Warren mentioned, but there's others as well. So, at R3, we build a platform called Corda. Corda doesn't have a global consensus mechanism. Corda has, consensus pools based on kind of the transaction that you're looking to fulfill. And consensus is pluggable in that sense. So you can really fine tune the kind of consensus that you need. And by doing that, you can fine tune the energy consumption. In terms of what the central banks are doing, I mean, at this stage, I must admit that there's not a massive debate going on around, the issuance of CBDCs and the consumption of energy that will take. Why? Because generally, the issuance of a CBDC from a central bank to a commercial, to kind of the wholesale side will be private, or is private at the moment. Should the debate of whether it should be on private ledgers versus public ledgers, listen, that rages on. But most of the projects we see today, we see the issuance of central bank digital currencies into private ledgers, and typically those private ledgers don't consume a hell of a lot of energy on the consensus side. Michael, I don't know whether you have anything on your side that you'd like to add to that, certainly around how we measure the current financial system's energy consumption.
Yeah, I think this has been debated a lot. I personally feel that the discussion around Bitcoin's energy in particular is a little bit, comparing apples to oranges, right? To level set a little bit, I dug into this at one point. The amount of consumption for Bitcoin is equivalent to the amount that the U.S. spends energy on Christmas lights every December, right? And I think so. The question is, if that's the level of energy that people start to worry about, then we shouldn't have Christmas lights, right? The amount of another statistic was the amount of plugs, the little adapter plugs that you plug in for your USB, right? They're just wasting energy. Everybody has this in their home. For the most part, that is a multiple order of magnitude larger power drain on the energy system in the world than Bitcoin is at the moment. And so then you have to ask, what is the function, right? What is the price performance of the energy usage to what you get out of it? Bitcoin as a decentralized system is providing payment functionality that if you want to replace with the traditional payment ecosystem, then you have to replace all the bank ATMs and the offices and the lighting in the offices and the people who are driving their cars to work. And if you really add up the an apples to apples comparison of the equivalent functionality, then I think Bitcoin comes out actually quite ahead, right? So I think there is energy expenditure, but certainly the use case for Bitcoin, I think the utility is quite high. So I think it's a rather of a moot point. Energy has to be spent on a lot of different things. There's a lot more energy spent on people looking at TikTok videos than on Bitcoin. So we have to make a call on what is practical and what's not. Yeah.
All right. So as I heard it, we're calling for a ban on TikTok and Christmas lights. Is that right?
That's right. I'm being controversial today. Yeah.
Let's hope no one quotes us on these. But all right. So I want to move on to the future of privacy and wallets and even CBDCs in that context, right? So if we look, say, 5 or even 10 years into the future. Maybe Ricardo, we'll start with you. Share with us your crystal ball in the future. How will CBDCs change the world? What do you think could be some of the effects from an angle of privacy as part of that world?
Well, I mean, today the big push on CBDCs, the G20 certainly focused on this is cross-border payments. So, what would 5 to 10 years from now would be. And we've all heard these statements. We all most of us move money around the world. We know how hard and expensive and kind of opaque it is. But for me, if there's one thing that you could pick out would be well, I can move my money kind of fluidly, the speed of an email, and I can exchange currencies fluidly, right? So, in my device, on my app, I can move around, I can travel country to country. I don't have to go through the same pain as I do today with foreign exchange and fees and kind of the process of kind of getting cash into my pocket, in my wallet, paying across different points of sale. And we know it's clunky, we know it's hard. So, me personally, I've lived now in 8 different countries. I know how difficult this is. I move money every month to my mum, my dad. And for me, the next 5 to 10 years, we should definitely solve for cross-border payments and FX. So that would be the one thing that I'd look at. And from a privacy perspective, I mean, I'd maintain kind of what we talked about earlier. I should have the choice. I should have the choice of what my privacy levels are. I should have the choice about what metadata is shared. I should have the choice about what metadata is being monetized. And I should be able to control that. So personal identity, self-sovereign identity, self-sovereign data, coupled with, money that is fluid, that is kind of, I can move it globally at the speed of an email, would be the one thing that I'd be chasing. And, from a corporate perspective, and then I'll stop, I think from a corporate perspective, if you look at the big promise of token-based CBDCs, it's really getting rid of, settlement risk, settlement cost, the cost that we have around reconciling all this data across all these various systems, etc. So I think, again, coming back to cross-border payments and the ability to have the choice around my privacy, I think that would be the big one for me.
Interesting.
Yeah,
Michael, any thoughts? Or Warren, go ahead.
Yeah, I mean, as it applies to at least the more, public blockchains, I think that we're going to face two things. One, massive privacy problems, and two, an identity crisis. Privacy problems being, blockchains are either radically transparent or they're dangerously private, and there's really nothing in between. And what that looks like in between is, a little bit of what Ricardo said, is it's more selective disclosure. It's more being, enabling individual users to control their own privacy, so that, most users are just conducting transactions and being good stewards and being good people. Sometimes there are nefarious actors that take advantage of, private, networks and try to conduct nefarious activity. So there should be a way for users to be able to kind of disclose and contribute to, investigations and fraud activity and everything while maintaining their own privacy. And right now, there just aren't enough tools out there, to enable that. There are, tools, like I mentioned, developing in the zero knowledge proof kind of, it's the niche within the niche of blockchain. And but this kind of empowers users with the ability to share information without actually showing it. And that's a powerful tool. I think that will drastically change, how privacy is implemented in not just public blockchains, but also more, private networks. And just being able to kind of protect user data. When I have, my data is all over, on everyone's data in the digital world, I have no idea, how it's being used. And a lot of people, like they don't think, like, when you swipe your credit card, what pieces of data are being shared with who. If they actually knew, they probably would want to pull that back and revoke that. There's no way to do that currently. The only option is to use cash. And in the digital world, there's no option for even a cash equivalent. So I think in the next, several years, this is going to come up as a topic. I'm afraid it's going to go in the opposite direction, and there's going to be an over-index on dangerously private networks that are going to rise in adoption. But then hopefully it'll switch kind of back and in towards the middle where there's sensible privacy.
Now with that, right? So we talked a little bit about sort of, the public and sort of private nefarious transactions on the user perspective, but there can also be nefarious, illicit transactions, corruption from a corporate or government standpoint. Now, does this stop then with a DLT, or sort of how are we looking at that? How are you looking at that, in the context of governments and corporates around that? Maybe Michael or Ricardo.
Well, I want to go back to the point that Warren mentioned, because actually I think it's great. Zero knowledge proofs, I think, will be the critical technology that will enable the right balance of privacy versus not. And another way of framing it is that you can actually make statements, whether or not, hey, you're on a sanction list, right, and therefore need to be banned from this type of transaction. But we don't need to go into the details. You don't need to give it up and have the whole world see. It'll be a yes or no thing. The technology will basically allow a regulator or someone who's doing compliance check do the right thing. So I think with that type of technology, there basically will be an infinite fine-grained resolution to how you can construct systems to be able to do to find the right balance point that society and as well as the regulators, as well as what the institutions will decide is the proper level. It will allow you to adjust this in the right way. And I think, as long as cryptographic systems are still secure, we have to, get into that sort of quantum race and, that kind of thing. But there will be a leveling up on both sides of nefarious actors trying to crack secure systems and the security itself moving into a more rigorous state. And I think overall, so far, I think you will be able to keep up, right, with quantum security and things like that. We still can get ahead of the bad guys. So I think overall, still positive for society. There won't be a societal breakdown thus far based off of technology, but it remains to be seen what happens. One point just real quick to follow on the other question, because I think is very relevant, is, what does this future world of regulated digital currencies look like? We got 86% of central banks developing their digital currency or looking into it. 1/5 of the world population will be using the CBDCs of the home country within 3 years by the Bank of International Settlements report. $24 trillion worth of regulated digital assets by 2027. So in 7 years, 1/4 of the broader money supply of the world will be on digital assets. And then you have to ask, what does that do to the international monetary system? I'm asked a lot about this because, digital RMB, is it going to overtake the dollar? It's less about the US and China. It's more about the fact that if there's a digital euro, and as you mentioned, Christine Lagarde, is outright saying they want to reduce dependence of the dollar and things like that. And the technology allows bilateral settlement, right? You don't need SWIFT. It's like using Pony Express when you have email, right? You don't need reserve currency. Okay. You don't need the US dollar to settle from different pairs, because the settlement can be done directly through AMM technology, which is already mature. What does that do to the international monetary system? So, I would say will be some systemic changes, but I think one where in general, it will allow more countries, big and small, to have a seat at the table. 1.7 billion people in developing countries to have financial inclusion. So I think overall, it will democratize the access to financial services, which it will be in the benefit of humanity overall.
That's a good statement, Michael. My view is, to your question around nefarious governments, nefarious corporations, nefarious kind of actors, in a world where you don't need brokers, in a world where you don't need currencies to settle other currencies, where you've got direct settlement, direct issuance, in a world where we have choice, I think very quickly those nefarious organizations, those nefarious governments will find themselves not being selected as that kind of the currency of choice or the option of choice. I think it boils down to that. And it happens today, right? So, if you don't believe in the values of a certain organization or a certain country, and you don't believe in kind of the principles, then you simply won't adopt the currency or the offerings from that country. So, and of course, technology-wise, I suspect in the next 5 to 10 years, we'll get better at technologies such as zero knowledge proofs. There's others such as secure enclaving, etc., that others are developing, which also give us the ability to share without sharing, which is really powerful. So governments will be somewhat restricted. Today, they can see everything, if you're in certain systems, but in future, we'll be able to really control down to that finite level, what data I'm sharing, who has access to what. Warren rightly said, and I think everyone on this call can attest to the fact that you have no clue what your data footprint is, your digital data footprint is today across all the systems that you use, including logging into this system here today, right? You've logged in, you've put in usernames and passwords and emails. Who knows where all this data goes? But in future, I suspect that we'll be much better at controlling and managing all of that.
Yeah, just
Very
as an
interesting.
extreme
Go ahead.
example, like right now, just nefarious activity with governments, we're witnessing a regime change, in Afghanistan happening, and reports are of Afghani people that are going, to actually withdraw their money from the bank, because they want to relocate. They don't have the, same beliefs as the new regime. And not only are they being, denied the funds in a bank run, but their private information, they just had a withdrawal request, and that's coming up on a list. And some of that private information includes physical addresses. So now maybe someone from that regime will go pay them a visit to ask, why are you withdrawing your money? Why do you want to leave? And that's just a extreme, here and now example of a government that could potentially use data against you. If they decide that you're no longer kind of aligned with their interests. So.
Yeah, no, absolutely right. And you see that in all sorts of countries. I mean, during the financial crisis in places like Greece as well, where there was these bank runs and limited on what you can do with your money. I think one of the concerns that I have, and I know many others do as well, is, does this system actually get designed to be more fair, or does it get designed by the people sort of, that have vested interest to make sure that the system sort of conforms to their way of making sure they can continue to extract value from it, right? And I think that's probably a question that, we might need to wait the 5 to 10 years to see what time will tell. But I don't know if you have any thoughts to that.
So the question being, Ali, kind of, how is the infrastructure of the future going to play out, and who's going to be extracting rents from that? Is that what you're trying to get at? I think.
Yeah, because you alluded to, for example, the system potentially being more fair, and some of the people that are trying to be corrupt, being cut out of that system. But if they're the part of designing that system, because they're in power right now, are they going to cut themselves out, or design in a way that helps them actually gain even more power and even more control?
Yeah, hard to tell. I think, listen, today it's much easier to extract rents in a system that is very kind of sticky, hard to change, and opaque. It's very opaque. So you can really do whatever you want in a kind of a non-transparent world. I think as we move and edge more towards an open kind of financial system, so you see open finance, you see legislation around PSD2 and GDPR and other kind of legislation coming in, which is protecting the rights of individuals. I think that the landscape of the future will be more transparent and will also be easier to plug in and plug out. We see value chains kind of being broken down, where before, commercial institutions able to control the entire value chain, and now those value chains slowly being kind of broken down, and other players being able to participate. And I suspect that you'll see more and more of that, where value chains can easily be pluggable. So yeah, that's a completely different discussion altogether, and we could spend a whole webinar discussing kind of the breakdown of value chains. But certainly more transparency and easier, kind of better legislation, easier to plug in systems, I think will allow us to kind of get better visibility of that.
Absolutely. I think just in the interest of time, I guess, Warren, you can make a quick comment, but we do got to wrap up.
I was just gonna say, I think, the rise of, tokenomics is becoming a very interesting, study, which is effectively, how to incentivize a network in a token economy. And that power of incentives, is early being playing out. Bitcoin miners also being played out, and stakers. You also see, the role of CBDCs and how they can, collect rent on different transactions. So I think, pay attention to that field. I think it's become a lot more legitimate and a lot more interesting.
All right. So, I think that this has been a very insightful discussion. Thank you so much to our incredible panel. And I can personally say that I've learned a lot, and I'm sure our audience will agree as well. I'm encouraged, by, where this world might go in terms of, better transparency and more fairness. I think there's still a lot of things that remain to be seen over the next 5 to 10 years. But there are many other incredible presentations and panels from experts all around the world remaining at MPC 21. So what better time to be able to learn from these individuals from the comfort of your own home? Be sure to check them out, as I know I will be. Thank you again to our incredible panelists for making the time today to share your insights.
Thank you. Pleasure to be here.
Thanks.